Good day, and welcome to the Thermax Q2FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Thanks, Sagar. Good afternoon, everyone, and a warm welcome to the Q2FY24 earnings call of Thermax Ltd. We have the management today being represented by Mr. Ashish Bhandari, Managing Director and CEO, and Mr. Rajendran Arunachalam, Group CFO and Executive Vice President. I'll now hand over the floor to Mr. Bhandari for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Good afternoon, Bhumika, and very good afternoon to everyone on the call. You'll have to excuse my voice ever so slightly. I'm still recovering from a mild cold, but fine otherwise. Overall, quite happy with how the quarter turned out. And I think you'll see consistent themes in pretty much all segments. Continued strength in industrial products, stability in terms of delivery, overall good strength in execution, lack of visibility on larger projects. I would say that overall pipeline on what's in play has improved, but otherwise, I think we could have. I did not expect such a slow quarter on converting large projects. We had a couple in play, one in particular which was quite large, where we were declared as L1, but some of what is happening with the project itself is a little bit up in the air. So overall, looking forward to the second half on industrial infra. Chemicals, happy with the profitability, expect more top-line growth and lot of actions underway to ensure that top-line growth also continues. Green solutions, we are making rapid progress on the solar wind hybrid business, which is FEPL. TOSL, steady. Both of these businesses, I think, will continue to ramp up and will continue to be invested in. Overall, I think just a good quarter execution-wise across the board. A very, very busy quarter in many, many ways internally. There was just a lot that was going on. And on the other side, I think expecting a second half pickup. I think 1,900 odd crores is lower than what we have done in any of our last 5-6 quarters, and we need to improve this trend again. So with that, I think I'll open it up for questions and jump right in. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Ankur Sharma from HDFC Life. Please go ahead.
Hi, sir. Good morning, and thanks for the opportunity. Just 3 questions. One was on the the overall order pipeline and or the inquiry pipeline. More so, as we head into elections over the next few quarters, unexpectedly Q4 government ordering starts slowing down. So if you could just help us understand across segments, how is the order pipeline kind of looking like? Also on the large order side, I understand this quarter was a little weak, but I think in your initial comments you spoke about some pickup there. So if you could also talk about, so both the base orders, also the larger orders. And to put it in context, a lot of other companies in the sector have been reporting moderation, in order inflows. So just wanted to get a sense, what are you seeing?
I'll share, and I think my messaging will be consistent with what I've been saying previously as well. For Thermax specifically, there's a cyclical shift, refining and petrochemical, which drove a good portion of the last 2 years. Going through a cycle where there are really not too many new projects out there. There's one which is finishing up, but after that, bit of a lull. It'll pick up again in a year or so. Meanwhile, the expectation was that the cycle would shift to steel, and you can see in steel is where we are getting a lot of smaller orders. There are a few big ones that are also in play. International also, the pipeline has improved. Cement, biofuels. These are the 4 areas where there is possibility of larger projects as we look at the second half. Will they close and kind of timing, etc.? I am hopeful, but we just have to wait and watch. All of these sectors are notorious for orders, timelines moving around. Beyond this, I would say so far we haven't seen as much of a slowdown. And you can see industrial products delivered a decent double-digit 12% plus growth on orders. Green solutions will continue to grow. Chemicals, I think pricing we have had to moderate as commodity prices came down. But overall, volumes have held steady. They haven't grown as much as I would like, and I would like to see a pickup in volumes in the second half. So that is the expectation. I think, overall, I'm still bullish on the second half. That Q2 was a bit of a lull on the overall order side, driven particularly by complete absence of larger projects. I expect that to improve as Q3 and Q4 come about.
Sure. And would you, I don't know if you can quantify in terms of the order pipeline, would that be substantially higher versus same time last year? Would it be flattish? Would it be higher in single digits? Any quantitative numbers you can provide?
So would be higher in single digits compared to last year.
Okay.
For a company like Thermax, it's not the quantum that counts, it's the quality of the pipeline overall. And I would say quality of the pipeline is slightly better than what it was at the same time last year.
Understand. And just one last question on the margins in the industrial products business, which seems to have touched double digit again this quarter. So any one-offs there, or how are you seeing margins kind of behaving? I understand RM prices have cooled off, so that would have helped. But how would you kind of see that coming quarters?
Some amount of, in this particular quarter, actually not in industrial products as such. Even industrial products overall had an advantage as well, but more in industrial infra, where there was one particularly large project, large profitable project, which got executed and commissioned, and we retired all our risks. So we were able to release that amount. In my count of the 2.5% improvement that we have had in margins, you could say half and half. Yeah, about half would be sustainable as we look forward as well. About half was driven by one-time items in the quarter. Even those one-time items were relating more to projects where profitability was better than average. Overall, I think I'm happy with where our backlog is. There are no particular red flags in the backlog.
And on the industrial products as well, this double-digit margins, you think the 9-10% range is doable?
I think where we are on industrial products, our heating business, which is our boilers business, had a particularly good quarter, which was in some ways relating to, we were increasing prices and in expectation that commodity prices were going up. When commodity prices stabilized, our pricing also stabilized, but we got that little bit of a window where profitability was slightly better. But that said, across our businesses, the water business, our pollution control business, our cooling business, all four of them margins, I would expect them to be reasonably good and stable. Yeah, so they would come down maybe a little bit from this quarter, but overall, I think sustainable.
Got that. Great. Okay, so thank you so much.
Thank you.
Thank you so much. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good afternoon, sir, and congratulations on a very good set of numbers. So my first question is on the, you just mentioned that there has been improvement in opportunity for the large segment orders, especially for industrial infra. Is it right to say that you have become more bullish compared to your commentary in the initial part of the fiscal?
I would say slightly more bullish. Yeah, on larger orders, I was muted, and I've been that way for 3 quarters now. Yeah, and saying that a couple of these new sectors, we expect them to start coming in, but we don't know what the timing is like. Yeah, so this last quarter where we had practically nothing at all, which was the weakest that we have had for quite some time. What has happened as a result is that while our inquiries were coming in, some of them have now bunched in that I expect something to happen. Yeah, with 4 or 5 in play, we would expect that at least a couple will close. So overall, I would say bullish on the second half of this year. And that is driven in some part by this particular quarter, which was particularly muted.
Understood.
I wouldn't say that I feel like where we were 2 years ago, where we were going from 1,200 crores to 1,400 crores to 1,600 crores. Practically, we were adding 5 to 10% a quarter. I don't think I'm that kind of bullish at all.
Understood, sir. My second question, you just mentioned that you are L1 in one of the large order. Is it possible to mention the order size and some details of the particular L1 order?
It's not very large. It's 300 to 400 crores. It's in refining and petrochemicals. But that is just one that I thought would have come in last year, which would have again taken us to that 2,400 crores number, which is where I expect the business to be at least as a baseline for this year. Yeah, so coming below that run rate increases the ask for Q3 and Q4. There is a possibility that we can bridge this gap from Q2 and continue to deliver good growth for the year as a whole on the order side. That is a possibility for sure.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you so much. We would like to remind participants that if you wish to join the question queue, please press star and 1 now. The next question is from the line of Bhavin Vitlani from SBI Mutual Funds. Please go ahead.
Good afternoon, gentlemen. So my question is on the orders, and when I look at the numbers by some of the other capital goods companies like L&T was up 75%, and when I look at Triveni Turbine, which is slightly more comparable, that was up 30% for them, but for us a flattish order flow and a 20+% decline sequentially seems a little disappointing. If you could just help us understand about the base impact of the large orders, and we understand that these large orders can be lumpy, but we have seen this run rate kind of stagnating to declining, and that is actually worrisome.
I mean, I'm not too worried. We see a lot of areas of optimism and strength. So overall, not worried. Two things in play. I can't comment on L&T and Triveni, but I'll talk about Thermax. There are, first is, some of our larger projects in the past were less profitable, and in some cases significantly less profitable than the rest of Thermax. I understand that large projects are important, but one conscious effort is to move towards areas where we can be profitable along with doing work which is good. So doing less of what I would term as empty calories, where you work extremely hard and don't have a lot to show for at the end. So working more towards technology areas where we can do long-term differentiation. I think that is the idea. So in that sense, some of the work that we are doing now, as we bring into orders, I hope some of those trends would also be sustainable. That's one. Two, I think Q2 was particularly bad. I think overall our pipeline of opportunities has only improved, and that includes larger projects. As the second half comes along, I do expect the closure rate to improve as well. And at least in going, the expectation is that on orders, we should be able to deliver at the Thermax group level a reasonable growth on orders as a whole as well.
Sure. Second, could you talk about the competitive landscape? Because what we have seen in many other related capital goods sector is the companies which were had been on back foot and almost on the verge of bankruptcy have suddenly become strong, and we are seeing new multinationals and domestic companies come and set up facilities, and that is adding to the competition. Some of these lesser or the unorganized one are becoming larger. So your comment on the competitive landscape, especially on how is that supply that we are seeing in the various parts of the boiler market, would be very helpful.
Across the board, very competitive everywhere. In every one of our segments, we have seen newer players coming in some cases on the larger boiler side, especially in the cement industry. We have seen the Chinese come in as well, which they tend to do from time to time, but I've said that last quarter as well. And we've seen in the cement industry, the Chinese come in as well. Overall competitiveness, these were always very, very competitive areas. I haven't seen any particular reason that our market share has gone down. And if anything, in many areas where the applications have gotten complicated, our share in the more complicated portions where customers want peace of mind and like biomass shift. Customers want equipment and a partner that is reliable. There our share has gone up. Maybe in some of the Me Too spaces, which were anyway competitive, then possibly our share may have gone down. But overall, I don't see, while we see newer players coming in, especially regionally, we see some shifts where in certain areas, new players would start to show up. And this is not just in our boilers here. Even in our air pollution control equipment, we see new players in. Water always was lot fragmented. If anything, water maybe is getting slightly less fragmented, which means the larger players are able to be more and more established as the applications have gotten more complicated as well. So a lot of moving parts. Nothing particularly so far that says this is a big red flag. To me, the only red flag would be having Chinese equipment come into India, which to my mind is a potential risk. And it's not done because while the Chinese can't dump steam, they shouldn't be dumping boilers either.
Great. Yeah. Thank you so much for taking my question. Appreciate your answers.
Thanks.
Thank you so much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi, good afternoon, team, and congratulations for strong performance. My first question is, if you can share some insights in terms of how is the order pipeline looking for international projects. We have seen quite a bit of traction on the hydrocarbon segment and some activities picking up on the process side. So for Thermax addressable market, how are we looking at export potential over the next 12-18 months?
Overall, a bigger pipeline than what it was 6 months ago on international. These are typically, though, longer cycle because many of these projects, besides the point of qualification, putting a financially competitive bid, etc., goes back to the commercial closure of the projects themselves. So, because these are for Thermax waste-to-energy projects, mix of multi-industry projects in Africa, Middle East, hydrocarbon-related projects. So overall, the inquiry pipeline on international is much better today than what it was 6 to 9 months ago.
And what could be the targeted inflow levels that can be expected over the next 2 years? Can we expect a couple of large projects like we had Dangote a few years back or of similar nature? I'm not sure from where is
आपण जो व्यक्ति को कॉल करूछंती से तार उत्तर देउनाहंती दयाकरी किछि
Hello.
Yeah, I can hear you now. I don't know from where that cross connection came.
I don't know what happened out there. There was a signal of sign from the God.
Check on this, please.
Definitely, I'll get it checked.
No problem.
Yeah, if someone from BAM Capital could look at what happened out there.
Yeah. So I was just trying to ask that, given the pipeline projects across sectors, the last large project that we won from international region was Dangote. And do we see similar kind of opportunities now opening up after a few years coming through?
Nothing of the size of Dangote. Dangote was, and there's no such size refinery or anything like that is coming up either. So it's not like Thermax doesn't, but otherwise also there are no projects of that scale and size. Overall, though, multi-location, smaller than Dangote, but lots more in quantity. I think our international pipeline overall is good. They're quite happy with the international pipeline. The current strength and as it continues to improve.
Sure. And lastly, can you share some update on the green energy portfolio in terms of the commissioning of projects and the projects in pipeline and the quantum of equity investment so far?
I think continued confidence and continued strength. What has not worked well is that every one of our projects on the hybrid side, solar wind hybrid, has taken slightly longer to commission, which means one project in particular, Gujarat, we missed the wind season by 2 months, which resulted at a good a few crores worth of miss on revenue and practically the same on profitability given how the walk from revenue to profitability is so high. So that would be the bad part. The good part is that the team is continuously executing projects continuing to see strong interest in our offerings from the marketplace, and we are limited by our ability to execute projects in terms of how big we can grow this. So we are increasing our capacity, and we'll continue to make sure that we execute projects on the FEPL side continuously. Yeah? So we're now 200 crores, but we have already a line of sight to getting to 400 crores. I think continuing to invest, exact numbers on how much we have invested, I'll let Rajendran share. There is some clarity also as we continue to grow that we should bring in an external partner to come into the business, because if the demand continues to be as strong as it possibly is, Thermax's limit, which I had said previously, of around $100 million, 700 to 800 crores, that continues to hold. Where we will not want to invest beyond that particular amount because we see a lot of other areas to invest in as well.
And how early can we bring in this external equity partner?
Let me finish though. On the social side also, we see good pipeline, and social too, depending on how the rest of the year goes, may require some amount of money, but that will be of the order of 40 to 50 crores, 25 to 50 crores, somewhere in that range. And I think decent opportunity pipeline, good market share, good execution, and a business which is reasonably healthy. We have invested significantly in supply chain for biomass, where previously, maybe 2 years ago, we would control or manage 5% of our supply chain. Today, that number is more than 30%. We are controlling ourselves of our supply chain, so strengthening our back-end in TOSO continuously. In terms of the timeline to bring an external partner into FEPL, some of it which depend on the growth of FEPL, but I would say 6 to 12 months is the period that I would have in my mind to bring an external partner in.
Thank you very much.
I hope I answered your question.
Well, I believe the questioner has dropped from the queue, so we would take the next question from the line of Lavina Quadros from Jefferies. Please go ahead.
Yeah. Hi, Ashish. Congrats on a good set of numbers. Just 2 questions. One is the Israel conflict right now, right? Is there any impact on overseas ordering? And you mentioned that the overseas pipeline is good. Is there any particular country driving it, or is it the China plus one continuing to drive it? Just wanted to understand that. Thanks.
The first on the Israel conflict, so far, nothing. And you could make a case for both sides here, in the sense that oil prices shooting up, which results in a big commodity shock, increases interest rates more everywhere else, slows down the economy, so that is, and affects margins across the board. So that is one scenario. The other scenario is that the conflict spreads, drives down global growth, drives down commodity prices even further, but drives down demand even further, which then results in a whole different set of moves. Both scenarios are possible. I think India in both cases is somewhat slightly insulated, and that is what we are seeing right now. No major impact at all. Long term, where is the growth coming from on the international side? From multiple geographies and multiple different. Previously, it was primarily refining and petrochemical. today we see a lot more from waste to energy, biomass, and then a reasonably healthy pipeline on refining and petrochemical as well. And this pipeline is built. A year ago, our international pipeline was weaker. It is now continuing to get stronger and stronger.
Okay. And lastly, thermal ordering. I mean, the BTG arm, which, I mean, are you all seeing a pickup on the thermal ordering front in India?
Some amount of inquiries. These are large thermal power plants. As I said previously also, less interest in bidding on large thermal power plants. The answer may change, but our engineering, we have moved completely towards waste to energy and more differentiated offerings. Large thermal power plants is not our interest. Again, I think depending on how specifics happen, the answer may change. But right now, I haven't seen any reason to get back into that kind of a business immediately. Yeah, I think in captive power plants, the inquiry pipeline has improved. But again, I don't see this as a big trend shift. Yeah, these are maybe an order here or two, but I don't see a big shift. Our own focus is towards more differentiated offerings, as I said, biofuels, biomass, chemicals, waste to energy, waste heat recovery. These are the areas that we want to build in and strengthen.
Thank you.
Thanks. Thanks, Levin.
Thank you so much. Would like to remind participants, if you want to ask a question, please press star and 1 to join the question queue. The next question.
Sorry, there was a separate question on which I didn't answer, which I said Rajendran would answer, which is around kind of how much have we invested in FEPL so far. I think, Rajendran, would you want to share specifics? Rajendran? Am I audible?
Yes, sir, you are very much audible.
Okay.
Rajendran, sir, your line is unmuted. Rajendran, sir, can you hear us? All right. So we would take the next question from the line of Mr. Vinod.
మీరు డయల్ చేసిన నంబర్పై ఇన్కమింగ్ సేవలు
We would take the next question from the line of Mr. Vinod from BOB Caps. Please go ahead.
Hi, am I audible?
Yes,
hello.
Audible.
Yeah. Thanks for the opportunity, Ashish. I just wanted to ask you, see, in your annual report, you mentioned about overhauling your HR processes and employee benefits, and I think that's getting reflected in your employee cost as well. From 230 odd crores last year, it's close to 285 crores. Any more overhauling yet to come, or do you think this should be a stable run rate as far as employee costs are concerned? So that's my first question. On a related thing, have you started seeing shortage of good quality engineers and resources? Something that was there in the previous cycle. Do you think that phase has started for this cycle also, or it is yet to start?
So, to your first question, do we see on the people expense? I think that trend is not still completely over, in the sense that overall salaries at Thermax, we would see what we want to get to is a place where when we grow, say 20%, we don't have to add people at all. Yeah, maybe 3-4%, 5%, but we don't have to add people, which has been the trend that we have in the past. Right now, we are continuing to invest in technology, continuing to invest in processes, operations management, etc. People are being added more in services, more in areas where we need feet on the ground, but our core teams which sit in headquarters or sit in offices, we want to keep that completely as flat as possible and close to zero. But that said, we want to pay our people better and then also use that as a way to get more and more differentiated talent within Thermax. There are a lot of
Hello?
Ladies and gentlemen, we have lost the line from the management. Please stay connected while we connect the management again. Sorry for that.
Hello?
We have the
Hey.
management line connected again. You can
okay.
go ahead,
And
sir.
can you guys hear me?
Yes, sir, we can hear you.
Can you guys hear me? Okay. When did I get disconnected? If someone could. Yeah, did I speak at all in the response to the question?
No, we're talking about employee cost and shortage of resources. Has it started happening in the industry?
Okay, but did you hear anything of what I said, or it got disconnected right after your question?
No, we got to that point where you said that it's an ongoing process, and I think more probably can be expected.
It's an ongoing process. We're continuing to wanting to add a lot of improved capabilities, because where the industry is overall, we need a lot of differentiated talent here, whether it's digital, many of the new research areas, better offerings for our customers, all of that. So this period where we are improving salaries, not adding too much people, I think that will continue for at least one more year, in my opinion. Do I see shortage of talent? I think we see shortage of talent. We went through a period where attrition was high. Attrition has now started to creep downward. But our hunger for good differentiated talent is very, very high. Very high right now. Sure. And I would say overall, I think in many engineering spaces, especially Pune and around, demand for talent continues to be high. There are a lot of global companies that are setting up their engineering offices in and around areas that are big population centers for us. And Thermax is always a place that is looked up for good engineering talent. Yeah, so both of those things, I would say yes to.
Okay. Yeah. Thanks, Ashish. The second question I had was more macro. So if you look at some of the commentaries of the large players in steel, cement, everybody is talking of decarbonization and process improvement. And as part of their process improvement, they are talking of a reduction in waste heat. So if waste heat reduction itself is going to happen in the process, what kind of a long-term trend do you see in terms of waste heat recovery? Do you think the whole industry itself is going to reduce waste heat, and then there could be a demand decline for waste heat recovery equipment?
See, overall, this shift that we see of how heat is being generated, how it is used, is something that we are seeing already. Yeah, and I've been saying this, that at Thermax, we need to be prepared for this shift. What happens, though, is that in this, the shift itself drives a lot of change, which is actually, if managed well, a huge positive for Thermax. We provide energy efficiency services, process improvement capability. We help understand where can you cut heat And for that also, Thermax's capabilities are hugely needed. In many cases, we ourselves are okay to cannibalize our own products. If you see on the cooling side of our portfolio, we have released several very differentiated products around chillers that can run on various different kinds of heat. We have released a hybrid chiller which can run on waste heat as well as electricity. We have now improved the capability to come up with heat pumps. Yeah, heat pumps that are hybrid as well. And we are saying, look, if you don't need steam, you just need hot water, very, very hot water. Think about using a heat pump and don't go for a boiler at all. Generate less heat and use an equipment which is smarter in that sense. But we ourselves are driving that change. Yeah, we are talking about closed loop cooling towers and our ability to get those cooling towers to work in a way that an air conditioning of a particular complex, you can cut 20 to 25% of the air conditioning by using closed loop cooling towers in a smart engineering way. The last example I would give, which is one of our best examples, is going to food and beverage industries and saying, when you make potato fries and the like, you release a lot of water vapor, which is hot. It's like boiling potatoes the way we do it at our kitchen. Using that recovering the heat out of that water vapor that comes out and recovering the water as well. Recycling the water so that the plant uses it as for all of its purposes. It's perfectly good drinking water quality, and taking the heat out of it and using it for whatever the plant may need from a heat perspective. So the application sets are abounding, and the more the world looks at change, going from A to B, even if that B scenario has less heat overall than the A scenario, the transition itself will drive so many new technologies that if we do a good job of working with our customers, creating new products, I think we can deliver a long-term growth, and which I think I'll belabor this point, which is a very important point, because it's okay for Thermax to not have very large projects, which are, you take a look at our FGD projects in the past, you could get 1,000, 2,000 crores worth of projects, but at 2-3% profitability. I think a world where we are able to get good profitable orders, where we do things that are repeatable and more meaningful for our customers, in my view, that's a much better way to build a long-term business. In that also, there will be, especially in the area of biofuels, we will get a lot of larger projects as well. Yeah, we will do a lot of interesting things as we get deeper and deeper into those spaces. And connecting those two technologies is a very important transitional shift for Thermax as a company. Yeah, last thing I would say in this regard is we are doing the analyst event one day where we would love to host all of you in Pune. Our communications team can share. We would show you some of our products, take you to whatever we can as a factory tour, maybe a customer site also if we could get an approval. But if nothing else, show you many of our products, almost like a mini roadshow where we could show you many stations of the kinds of new things we are doing. December, the date is finalized. Our communication team can share the details. We would love to have as many of you as possible join us in December in Pune.
Sure. Thanks, Ashish. We look forward to the meet at Pune. Thanks.
Okay. Rajendran, are you there now? Can you speak?
Yeah, am I audible, Ashish?
No? Yeah, you are audible. Yeah. So if you just want to answer the question on FEPL and TOESL, maybe on how much have you put in this quarter, and that would be great. Yeah?
Sure. Ashish, I think, so the first energy, I think we've invested close to additional 200 crores and there's both debt and equity. That's the increase that's seen in that business at this time.
Nice to hear.
Thank you. The next question is from the line of Mr. Aditya Mongia from Kotak Securities. Please go ahead.
Sure. Thanks for the opportunity. The first question kind of takes off from your assessment of how much money you will put inside FEPL and how much you want to have for other areas. I guess the limit that you set for us is 800 crores, I'm assuming equity. In other areas, is there an opportunity to invest on an aggregate basis more than this quantum? And if so, what will be the large moving pieces over here?
The large moving pieces as we look forward will be, one will be chemicals. I think to grow chemicals long term, we will have to continue to invest in the business, and we would want to do that. I think as we get into some of our newer spaces around green hydrogen and some of the adjacencies in our newer and new energy areas, there could be areas of investment that will come about from those as well. Last, I would say in industrial products, in a couple of the segments that we are already playing in, there could be M&A opportunities in adjacencies where we see particular growth. I would like to say that we are not interested in M&A which is like international or otherwise. Where we see and going back to the theme around what capabilities that we think we will need for the future. We do think partnerships and M&A is a great way to get to those capabilities and competencies. But we would want to limit these closer to our home base, which is India. Yeah, so add differentiated capability in India and then take it from India globally wherever we think we want to. That is the route that we play. Nothing of the order of 700, 800 crores, but lot of smaller bets investment. That is where our money would go.
Sure. Just a related question over here. You did talk about energy efficiency and energy management. Obviously, you're not highlighted that in the last response of yours, but could that be an area wherein probably Thermax has to invest? And if so, what are the kind of bets you would want to take in that space?
Energy management overall is something that is very underway. Yeah? So a lot of what you see as our growth in industrial products, I would say a good chunk of it is actually driven by some of this capability and some of what we are looking to do. Yeah, and I'll take them. I mean, we take them something like water. Yeah, water is has got good growth. I mean, our water business used to be 300 crores 3 years ago. We were on an order booking side. I'm quite confident that this year they'll finish more than 1,000 crores. Yeah, and it is driven by a lot of new things that are happening in the water space system. Things like zero liquid discharge. Zero liquid discharge at its core is actually how do I manage heat well, because you're talking about evaporation, heat recovery, recycling things. These are all capabilities that go back into how do you make this energy efficient, how do you manage this in newer, smarter ways. Some of what is being asked at the beginning is something like, say, desalination. At the beginning is desalination, tough to treat water. They're all technology areas that are already in this realm of energy management, so to say. Yeah, so multiple of our products, even something like air pollution control. How do you manage air pollution control where your input fuel is constantly changing and still deliver the highest environmental norms? That also in some ways is energy management. While the fuel shift is happening at the beginning, the entire system changes. So we are well within it. The last thing I would say is our investment in digital and exact space, the partnership that we had done, minority investment that we had done a year ago. that exact space partnership is something that we are continuing to expand and releasing a whole set of newer and newer capability on our Edge Live platform, where we are able to offer customers insights into their assets, which is, in my view, in some ways better than what anybody in the world has. Yeah, and really, really happy with some of the capabilities that we are developing out there.
Understood. Just one question from my side to end it off, and this is on a separate context of margins. As in, I think 2-3 quarters back, your confidence of doing a 10% EBITDA margin print at an overall level was quite low in terms of your own confidence. Are things changing? Are you believing that one can cross that barrier at an overall EBITDA margin level over the next 2-3 years?
Yeah, what we had gone through was a year where everything was changing constantly. Yeah, logistic prices, commodity prices. So as we came into this year, I thought something or the other would continue to change. And what we got was a period of relative stability, which meant that we could execute on many fronts reasonably well. And really, we don't want commodity prices going down for us to make money. All we want are commodity prices to be stable. So if the stable environment holds, my bullishness on our ability to come up with better margins, that also holds. Yeah, we had some one-time items this last quarter, but more than 1% improvement in margins is something that I think we can sustain going forward as well.
Sure. Thank you for response. Those were my questions.
Thank you.
Thank you so much. The next question is from the line of Tina Virmani from Motilal Oswal Financial Services. Please go ahead.
Hi, Ashish. Thanks for taking my question. My question is related to the two new opportunities that can come where Thermax is already working upon. So can you share an update on any further development on the hydrogen MOU side where you are already working upon? And my second question is related to the expected addressable market that can open up for your offerings on the water side or maybe ultra pure water side from this entire expansion of semiconductor manufacturing. So where do you see Thermax getting benefited out of it, and where do you actually see this water business, because this is already improving for the company? So how do you see the addressable market, if it is possible for you to quantify that?
Okay. So on the first one, on the hydrogen side, wait and watch. I think we have shared this time that we have created a team completely dedicated to hydrogen. And that is one place where we have added a reasonable number of people. We have reasonable amount of R&D and technology investment, which is also ramping up in hydrogen. Very early to share successes, and don't expect anything for the next year also, I would say. Yeah, and then there is something major to share. We will come back. In terms of our partnerships that we had done, see, our interest in all of that was that we wanted to be able to bring differentiated technology into India. And for that to happen, we needed to see clear line of sight into that technology, and then making sure that the partnership also can evolve in a way that both sides can get meaningful advantage from that. So that, I think, is a constant discussion. I've got nothing to report. I can just say that we are evaluating the partnership very, very closely, and we will see how that unfolds. Yeah, and this is specific to the one MOU we have done on the hydrogen side. We are evaluating it. On the water side, obviously, it is not just water. Even our air, like in a lot of the semiconductor industry, you need scrubbers, you need lot of things which come from our air pollution control equipment as well. Both water and air pollution control have a much bigger pipeline because of some of these newer industries, semiconductor being one, solar being another, very competitive spaces, but the pipeline is bigger. Which I stated also that some of these businesses are structurally now much bigger than what they were even a couple of years ago.
Got it, sir. And my last question is related to the pending FGD projects which are there in your current order book as of now, and your capex amount was on the higher side in 1H of around 452 crore or so. So can you specify where exactly was this amount spent?
So capex is largely going towards SEPL. There are some minor capexes. We put in a new plant for our water business and all. So some amount there, but largely beyond regular run rate business in this new plant for water and for primarily for SEPL. Rajendran, would you want to add anything?
Yeah, and also the new chemical plant, there is an capex which is
course. Yes. Okay. Which is a plant under construction on chemicals as well, expected to come online 1 year from now, end of financial year 2024, financial year 24-25, so 1.5 years from now, but under construction as we speak. On FGD, I think we continue to execute. All our 4 FGD projects now are getting into advanced stages of execution. The first one will go through mechanical completion in the coming months, and then overall commissioning right afterwards. So we are now starting to see some light towards closing these projects as well.
Okay, and remaining 3 will be under construction?
Remaining 3 are under construction. I think they'll all continue to go through execution. I think on FGD now, from now to the next 18 months, we'll see continuous revenue coming in. And with that continuous revenue, hopefully some margins also, because we have taken 3-4 quarters where we were showing losses on FGD because we had a base cost but not enough revenue. Now in this coming period, we should have reasonable revenue as well. And so some amount of no single digit but profitability as well.
Got it, sir. Thanks a lot. That's it from my side.
Thank you.
Thank you so much. Mr. Bhandari, can we take 1 or 2 more questions?
One last question here. That's it.
Sure. So the next question is from the line of Arafat from InCred Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question. My question more about the biogas and green energy. So what kind of opportunity are you looking in this business over the next, let's say, 3 to 4 years?
Potentially very big. And you can see that all the majors have announced big plans, totaling to hundreds of projects. And Thermax could potentially be one of the beneficiaries of this. Yeah, right now also we are executing multiple projects, of which a couple are close to commission. As they get commissioned and as we have success in commissioning those projects, it can potentially open up a pipeline to many more such projects.
Okay, fine, sir. So any ballpark, what kind of...
Sorry to interrupt.
Any quantum?
Your line was not clear. Can you please repeat your question?
So my question is more about, let's say, biogas. What kind of revenue are you looking in next FY25?
If we're not looking at any revenue projections right now, we know if we do a good job and we execute well, the potential is almost limitless. Yes, so it is one of our biggest growth areas. But to get to there, we need to execute and commission the plants that we have currently in the mix. Do that well, and if we do that well, the potential is boundless.
Fine, sir. That's it from my side. Thank you.
Thank you so much. We would take that as our last question. I would now like to hand the conference over to Ms. Bhumika Nair for closing comments.
Yes, I would just like to thank all the participants and particularly the management for giving us an opportunity to host the call and answering all the questions, sir, despite your bad throat. Thank you very much and wish you all the very best, sir.
Thank you. Thank you very much, everyone that was on the call and for listening to us today. And thank you for the time that you spent with us. Much appreciated.
Thank you so much. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.